What's up, YouTube? Back for episode number 2 of this new journey. Let me take my glasses off. I'm excited to be here. And so today we're going to talk about how do I chart, right? We're going to talk about all the setups that I went through, with what works best for me, and the charting style that I've used to give me the most success. You'll see what indicators I have on. I'll go over that as well. And then also, anything that I feel like that may be helpful, right? So we're going to talk about that, and without further ado, let's just get right into it. All right, so here is a chart. This is SPY. As you can see, SPY, the S&P 500 right here. I'm going to zoom out. This is on a 15-minute. I'm going to zoom out. Let's go to a chart that I don't typically trade, right? Let's go to something where I don't have any lines on or anything like that. So I start with QQQ. I'm not really a big fan of QQQ. And as you can see, there are some lines here. I'm going to go down to the 1 day so you can see there are some lines here. So these are probably, look, these lines were made in January of this year, May of this year. So these are pretty old, right? And I've adapted different ways of of trading since then. I'll show you. We're going to do QQQ, but I'll show you a way in which I've traded before. Let's see if I can find one with the old patterns on it. All right, so crowd a little bit, but I'm looking for someone that may have some more. Let's see. Nah. All right, I can't find it, so I'll stick with crowd. Here we go. This is it. SMH? Maybe. All right, well, I'll stick with SMH. Okay. So, first and foremost, get this out of the way, and then let's zoom in, right? So, SMH, I used to trade for a very short amount of time, which is called range bound. So, you can see these ranges right here, these boxes. These are pretty much ranges that the stock stayed in on maybe like a 4-hour period. And then when it broke out of the range, I may take a trade. It build up the next range. These are also good for like long-term trading because now you know like exactly what level that it can bounce back to instead of like a quick supply and demand. So this is like a long-term supply and demand. So let's go back to QQQ because it worked for some time, but then I noticed like the range from here 254 all the way down to 235, that's a big range. That could be a trade in itself, right? And so for me, unless I was holding long term, this trade style really wasn't the best for me. So as you can see, like the box here bounced up and down for a couple of days, bounced up and down a couple of days, right? And then moved to create new boxes. And so I used this for a while, but then just it wasn't conducive for me as a day trader or as a short-term swing trader for like maybe like a week or maybe 2 weeks. As you can see, this is a week right here, right? It stayed in one box. So I developed a different set of rules for my trades. So let's go back to QQQ. For my charting, I'm sorry. So let's go back to QQQ and we'll go over those. So originally, I learned how to chart based off of supply and demand. I still use supply and demand. A lot of people call it, like liquidity grabs and imbalances and all of that other stuff, volume profiles, market structures, all of that, right? At the end of the day, it's supply and demand. And the reason why it's supply and demand is because there's a market. It's a fair market, right? If if Chipotle came out and said we're going to do $5 bowls, the demand will go up because the price is so low. However, if they say, you know what, we're going to charge our bowls $30 now, the demand would decrease because the price is so high, right? So it's just a market structure. It's just supply and demand. So whatever fancy words that you want to give, and I've adopted some of these fancy words, but whatever these fancy words that you want to give, it is what it is. But at the end of the day, it's just basic supply and demand, right? And so this is how I used to chart. You can tell we're still on a 1 day. So let's look like back here. So I will mark out places of confluence or places where I thought, there was supply, like right here. We hit a ceiling, came back down, hit another resistance, came back down. This became support. This became resistance. However, there's supply up here and there's demand down here, right? So I mark these levels out, so on and so forth. And to be honest, this is kind of how I got my range, because when you look at it, it's like, okay, this tight box right here is a range, and then it breaks out and it forms another type box, and it breaks out and it forms another type box, so on and so forth. However, I just noticed that that wasn't the best way for me to go about doing it, on a shorter term basis. On a longer term, yeah, it works, but on a shorter term basis, for my swing trades, for my day trades, I just felt like it wasn't that. And another reason why I didn't like these charts right here, or this charting style right here, because although it looks very, very simple, very, very clean, I did not like the line, because sometimes, right, sometimes we can see that this candle right here comes above this candle right here. However, this is still a whole range of supply in this area, right? And so a line to me was like more exact, more direct, and we can't just time the market like that, or pinpoint the market like that at the exact penny every single time. So for me, it left a little bit of a gray area. It left a little bit of, how do I want to say it? It left a little bit of like unsurety, because in the back of my mind, I always came over and decided, like, oh, am I going to take profits a little before the line, or am I going to see if it breaks through the line, so on and so forth. And for me, I just didn't like that. So I ended up making a new change and going to rectangles, right? Now I'll show you how, I form out these rectangles and zones, right? I form out these zones and we'll get into it. So let's clear this, right? Let's clear this. Go to drawings. We're going to remove drawings. Let's clear all the old drawings off this. No, let's remove, yeah, let's clear all the old drawings off of this. Let's go back to 180 days on QQQ. Okay, let's go back 30 days on QQQ. We're gonna remove these. All right, that didn't do too much. Let's just clear this drawing set. I'll be so mad if this drawing set cleared for the entire. Oh yeah, this says all drawings from the set default device. No, 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 no. That's not what we're gonna do. All right, so we can't do QQQ because, matter of fact, we will. I'm gonna pause this and I'm gonna erase all the lines and I'm gonna come back. Okay, we're back. I cleared up all the drawings, so let's get right into it. First things first, I'm gonna point out my indicators, right? So I got a moving average here. This is a 20 EMA moving average. This is a 50 EMA moving average. I used to have the 200, but I got away with it. So I like these two. I like the 20. I like the 50. This right here, down here, is my volume with an average volume bar. Now my volume, I will, let's move me out of the way for a second, and let's zoom in on my volume. So my volume, as you can see, it shows a little bit of the percentages of um, who is buying versus who was selling, right? So that's a little bit of a difference from my volume versus, just the regular red or green volume bar. That is an indicator that I found online. I can, do a video about that and give you guys a script if you want it. But that's just my. Also, I'm on the 1 day. When I chart, I do chart on the 8 hour. I will tell you why. The 8 hour to me breaks down one whole day into 3 candles, right? You got your pre-market 8 hour candle, you got your during market 8 hour candle, then you got your post-market 8 hour candle. I actually got this idea from a young lady on Threads where she used a 12 hour, and it was like, wow, why did I never think about using kind of like an off-brand, off-market time frame? And the reason why was, it is what it is, but also, we were it's just programmed like that. So I decided that I wanted to use an 8 hour because I definitely want to see the highs and lows of the day. but also I definitely want to see what happens in pre-market and post-market. So 8 hour works for me. So as you can see right here, I'm on a 180-day 8 hour, right? So let's start. First thing first, I always mark out the all-time high. If you hear my children in the background, I apologize. But you know, kids gonna be kids, so what can I do? So I always mark out the all-time high, right? So let's get it. 505.21. 505.21. I'll go ahead and I'll make this red. I always label my lines ATH, and I always make it to the end of a day, which will be 16. And I like to pick like an end of the week type. I'm that type of guy, right? So I'll go to September. We can do September 20th, right? End of the week. All right. Boom. Oh no. All right, so let's fix that. Let's fix that. So the end point, or the beginning point, was back in July. Let's say July 10th. The end point is 9/20. Boom. All right, cool. So we have our line right there. Now it's time to make our first demand zone or supply zone. What I like to do is work from the outside in, right? So we have a supply zone here. We have a supply zone here. Just going to grab the rectangle and I come down and I will cover this whole entire candle right here. So I want the upper wicks all the way up to the all-time high, down to the lower wicks, and then come over here and I edit. So we call this 8 hour, 8 hour. I like to round my numbers to the 5, right? Again, the bottom right is going to be, or the later date is going to be the date that I changed. I never changed the first date. So I'm just going to come down here, select September 20th, and I'm going to put that at that time, right? And so now I'm going to mark out the low. So the low right here, this is a large candle to make demand, right? This is a large candle to make demand. So what I'm going to do is I'm going to mark out the beginning of the opening candle all the way down to the wick. And then again, just going to come in and edit. Label 8 hour. We're going to come down to that. And we're going to turn this 16. I'm actually going to change this to 20. And I'm going to change this to 10. Right? And now we have our supply and our demand on the 8 hour. Right? So from here, we can shrink this and we can say, okay, where else is supply and demand? Okay, so I do see a wick here, right? But I see, more importantly, I see one right here. And this wick takes out this demand. So I know this was a demand zone right here, right? And so I'll come over here, zoom in, let's create a demand zone for this. Tag it right over. And as we look at this demand zone right here, we see that this demand zone has been touched 3 times. And each time it's been given a high reaction, right? A high reaction to sellers. So if QQQ was to come back up here, I can see a game plan. Look, tag right here, reaction. We got a reaction from 85 all the way down to 73. That's $12. Tag right here, reaction with the cross all the way down. Come back up, tag right here, all the way down. So we can keep going. Obviously, this is the demand zone, supply zone, but it was broken. So I'm going to leave that alone. Plus, we so far in the past. As you can see, though, we did come back from this zone, came back, broke out, broke below, retest, and then failed. So maybe I will mark that zone, right? But instead of marking it from here, I'm going to mark it from over here, just because I like my charts a little bit cleaner. And so it doesn't matter how far I go out because I'm always going to change the date so that it aligns with where I want it to. And I'm going to change the time frame so that all my points can line up exactly where I want them to, right? Here, there could be some demand right here. So I'll make this. And the reason why I do the previous candle plus the wick, I'll explain that real quick. Just so you understand. Let's zoom in on this candle. Let's zoom in on this. Okay, so the reason why I make the demand zone all the way up to the wick and then the close or the open of this candle is because if you think about it, sellers pushed this all the way down, correct? Then buyers came in and stepped in and pushed it all the way back up. But this was where it opened at. And so buyers came in and pushed it even higher, and then sellers came in and closed. So originally this right here is where sellers stepped in. Now I want you guys to take this into consideration. There are no intervals in the market. So when we see a candle, we see an interval. But in real life, time just flows, right? So you can say that this candle right here was the start of the demand and it pushes down, right? Comes back up a little bit, says, hey, can we get above this level? No. Pushes it down again, all within the span of, however long it took. So these are 8-hour candles. So this is a 16 hours that it took for the demand right here to flood out, right? And so that's why I always go from either the wick from the previous candle and then open or close. As you can see here, the wick and then open or close. That's the reason why. I just wanted to put that out there because a lot of people, they don't really know why they make their zones. For me, this is the reason why that I make my zone. And I'm happy with it. And it's been working for me. I can show you exactly levels and ways in which it worked and go from there. So I do see a zone here. Maybe we can put a small zone here, little minor zone, right? And I'll tell you what I do in situations where there may be a minor zone, but also it's too small for me to actually put a zone, right? So let me find an area that could be too small for me to put a zone. So I do see a buy zone right here. So I'll mark this out. And this is what I do. I just find them on this time frame. I don't go smaller. I don't go higher. Just find them on this time frame and I stick to this time frame. Because essentially all of the levels that you'll find on a weekly or daily, they're going to be here anyway. So if you're good enough, you get good enough at doing this, you can spot those levels. So see a level like this, right, that we marked out. This is a minor level for me. I would have just put dashes, right? Now we can go back all the way back and continue charting, but essentially this is it. This is enough. So this level right here, let's take this level. I'm actually going to change this to a line. I'm going to mark out this line right here. And then what I'm going to do is, of course, label it, change the end time. But then also change this to a dash and lighten the color. I don't know if you guys know how to lighten the color so that it's transparent. I don't like really seeing having it so bright that I can't see the actual candle. And now I have a minor zone right here, right? And so this is basically how I chart. So when I shrink this down, now I'm looking, okay, it looks like we're rejecting this off of the 20 EMA, but then also there's a level right here. So we could come back down to this level. That could be a potential trade, or I can hold on and wait to see if it breaks this level. Okay, now I think I'm gonna stop it here. In my next video, I'm going to show how I use a certain strategy along with these levels to take trades, which is very simple. The hardest thing for me to do is basically to have the patience and have the discipline. And so when I look at this chart and I see a potential trade like this, maybe it's a high risk trade. But back in the day, this is a trade that I would have taken. Like, oh, it looks like it's going to come down. I would have taken here, even though it's in the middle of a zone, and the possibility of getting it wrong is way higher. Whereas on a trade like this, like today, we have a easy setup that we played out and actually could have made very good money on. So I think we're going to make another video on that and show you guys how I use a combination of zones, my EMAs, and also my org strategy. Well, not mine, but the org strategy, and make trades. And I may talk about my swing trades as well, right? With defined risk. So I'll do that. But until next time, I thank y'all for being here. If you have any questions, comments, concerns, please don't feel free to drop them below. I'll definitely read them and get back to you. If there's anything that you would like me to talk about, definitely comment below, and I'll continue to put out more content. Again, I said I'm doing raw and uncut, so if you hear my children going crazy in the background, I apologize. The blank background, I apologize. No light. Let me turn the light on for you. There you go. Now you got some light, setting up the ambiance. But again, man, I'm just here to put out pure content, pure quality content, and continue on my YouTube and trading career and my investing career and all that. I wish you guys much success. Let me know how you guys did today. Until next time, it's been Finance King. I'll see you on the other side.